Now you can get rich very young just by having an idea. I'm looking for durable competitive advantage. I'm looking for something that has a moat around it for a considerable period of time. And I'm looking for an honest and able management to run it because I know how to run it myself.
Welcome to Get Started Investing, a podcast that will give you the confidence you need to start your investing journey. This is for anyone who wants to start investing but isn't really sure where to start. Our aim is to cover all of the basics and to make the markets accessible to you. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How's it going, bro?
I'm very good, Bryce. Very excited to be back in the Get Started Investing feed and to be bringing not just this episode, but the next 2 episodes. We're doing a bit of a 3-part series, bit different, following an Equity Mates community member's journey to actually start investing. And we're so excited that we're releasing it on both the Get Started Investing feed and the Equity Mates feed.
Huge. That is right, Ren. Over the next 3 episodes, we're going to track the journey of a Millennial and Equity Mates community member who has never invested before but knows it is the right thing to be doing. We're going to cover the basics, what he can invest in, answer all of his questions, and then watch as he finally pulls the trigger on something more meaningful than a 60-inch 4K computer monitor.
Well, we should actually say, speaking to him, and we'll introduce him in a second, he actually bought an Apple Watch today. He's spending,
this
but
guy must be nice.
He's not investing.
It's pretty nice
for
actually.
now.
Hopefully by the end of these 3 episodes, you too will be inspired to take your first step into the markets as we show you how easy it can be, particularly thanks to technology and apps such as CommSec Pocket. So let's meet our investor. Rowie, welcome to Get Started Investing.
Thank you, Equity Mates. Great to be here.
Now, we should reveal that Rowie is an Equity Mates community member and he's also a friend of ours, been a friend for a while. And whilst we've been slaving away on the podcast, trying to convince people to invest,
Copping heat from Rohan.
we haven't been able to convince Rohan. And that's been a real sore spot for us.
It has been a sore spot. I've known Rowie for a number of years now, and it's always been something that you've put into the too hard basket. Is that how you would phrase it?
I suppose so, yes. You guys have finally worn me down. I should also clarify that it was a 32-inch monitor, not 60.
Was it 4K?
It wasn't 4K. No gaming, XL only.
No.
But it's got a curved screen, which is quite nice.
It's very nice for me indeed.
So as we introed Rowie, we're very keen to sort of track your journey over the next few weeks to actually get you into the markets. I think maybe it's because of COVID, I'm not sure, but you've recognized that now's the time that you want to get in, which we'll cover in a little bit. But before we do, perhaps it would be just a good idea for you to intro yourselves to the Get Started Investing community.
So I'm Rohan. As the boys have pointed out, I've been friends with them for a while now, and they really have been on my case almost on a daily basis to get into the market. So I think now is as good a time as any. I recognize, probably time that I did something rather than make some material purchases. I will admit, rare that they are. And let's start making my money work for me, hopefully.
Not a bad tagline.
Not a bad one. We might take that. So, Rowie, we've chosen you for this 3-part series, partly because you're our mate, partly because to our eternal frustration, you didn't start investing. But also, I think your experience is pretty common and pretty universal in terms of how old you are, where you are in your working life, and the fact that you still haven't pulled the trigger and started investing. So for a bit of context for people, you don't have to tell us your age, but tell us sort of like how long you've been working and a bit about, who you are.
Sure. Well, when it comes to age, I am of a very similar age to the two of you.
He's 29 and single, so let's just get it out there.
Yes, both true things. I have been working in my current profession for probably 4 or 5 years now. So, making not a casual income. And I figured rather than, just like let it while away, it's time to maybe be a bit more proactive and also think about the future as well. Mm-hmm. Yeah, if I'm being perfectly honest, I really haven't thought about what to do with the money. My efforts have pretty much been focused on making it. But I think, now it's time to go beyond that and transcend into getting some returns and, start thinking about the future.
What has been your thought process over the last few years when it comes to your money? Are you actually putting it in other sort of assets, or has it just been let's keep it in the bank and save it for a rainy day, avoid the tax man?
Me and the ATO are good, in case they are listening. We're very good. I have not really thought about anything to do with it. I haven't invested in any other streams. So now is the time to probably start thinking about doing something with it, because in the last few months I've had, as have all of us, had plenty of time to think.
Yeah.
My previous approach was just to let it pretty much sit in the bank. I'd like to say that I was creative in where I put it in the bank in terms of interest rate and things like that. No, I don't mean like in the British Virgin Islands or the Caymans, but thinking about like a high interest rate or something. Truthfully, I have not. Literally, it just comes in and mostly sits in there. And yeah, it is the wrong approach. I guess some of my main reasons for not doing it in the past were putting it in the too hard basket, not knowing really where to start, because I do follow finance in general, business and more broadly the economy, but to leverage that knowledge into working for me is not something that I had considered. Well, I had considered it, I just hadn't got around to it. You could brand it laziness, apathy, however you want to put it, but now is the time.
Let's unpack that a little bit, because I think a lot of people are in a similar situation. I mean, I was definitely in a similar situation. You follow business news, you know what's going on in the economy. You have this idea that investing is something you should do. But for me, it took me a while to start. And, you know, you say apathy and laziness. You're not a lazy guy. You know, you work hard with your new 32-inch monitor as well. So what do you think was actually stopping you translating the idea of investing and the knowledge that it's probably something you should do to actually taking that first step?
Yeah, it's an interesting question. You're right. I do apply myself, I like to think, in many other aspects of life, but...
Such as what?
Look, we don't have to go into it.
No.
Take my word for it. Mainly my job, really.
Yeah.
And so the main thing, I guess, was really not knowing where to start. I had a general sort of idea of, if I got online and did the research, probably spent a fair bit of time looking into it, as I do with so many other things, then I would be able to work it out. It just hadn't really interested me that much, particularly when I was younger. And now I'm more interested in it, but I want to get invested in it too. Mind the pun. No, not the pun, the
pun.
Yeah.
Was there an element of, you've worked so hard to kind of get to where to get you where you are in your career and to save diligently? Was there an element of fear, I guess, of putting money in the market, knowing that there is some risk associated with that, less so than in the bank, not taking into account your interest rate is totally warped?
No, definitely. As you guys know and generally tend to call out quite often, aside from my recent couple of impulse purchases, I'm, you could probably say, a frugal guy.
Yes.
Risk averse, to say the least. And yeah, the idea of maybe losing some of that money, I wasn't afraid of it. I probably used it as an excuse more than anything to not invest. I was just like, oh, well, there's the off chance that, it might actually go down, which there definitely is. But as you guys have also told me, I won't know until I try.
Absolutely.
And judging by the stories that I've heard from yourselves, you have had similar experiences.
And I guess this is what happens to a lot of people as well. They are worried about losing that sort of hard-earned cash that they've saved diligently and put it away. And maybe you're now in a position where you perhaps have that sort of chunk of savings and you're willing to take a proportion of that, not necessarily your whole amount. I think you kind of get to that point in your savings journey and your finance journey where you're like, okay, I'm willing to put down, I don't know, a few $100 or a few grand, whatever it may be. And that's kind of led you to this position. Is that fair assumption?
Yeah, I'd say so. And it's an interesting point you make about saving diligently as well. I think if I was saving diligently, I would have looked to have made more use of the money. Realistically, I think it just circles back to just not spending it.
Yeah, fair.
I buy the things that I want, but the rest of it sort of just goes there. I didn't have a sense of appreciation for wanting to capitalize on the money that I had sitting in the bank.
Yeah.
So, Rowie, you're here now because you want to invest. You're deciding to take the plunge.
Let's do it.
As you've mentioned, you haven't been spending for a little while and you've got some money saved. I'm interested to unpack why you want to invest by first asking you, why stocks? Is it just because Bryce and I bang on about it on a podcast, or have you thought about other things like property and stuff like that?
I have. Well, firstly, to get into property, it's more cost prohibitive.
Yes.
Put it that way. And the second thing is, as I said earlier, I want to leverage my knowledge about general economy, business and finance and things that I'm already naturally inclined towards to try and make that work for something positive. If I was to get into the property game, aside from it being extremely expensive, I haven't followed the property market closely. It would have to be starting from scratch now, basically. Whereas I have somewhat followed the news and the business world for ages. So I feel like I'd have more of a chance of knowing what's going on.
I think that's a really good point, and something that Alec and I have spoken about on the episodes in Get Started Investing is that you actually probably know a lot more about the companies that you're going to be investing in and the world of finance purely just from you reading.
Probably work for some of them.
Exactly. You may work for some of them. You've got the Apple Watch, you've got your monitor, you've got all these companies that you know a lot about just by nature or virtue of interacting with them and reading the paper and whatnot. So glad that you've recognized that at least. I think that's a very positive step.
Hopefully with your guys' help.
Our management fee's 20% of all profits. So
Yeah, right. Even I know that's a bad deal. Let's
hey, this guy's good.
let's take that offline. Do you guys have a bleeping button on this thing?
I think at this point, you know that investing sort of makes sense in an intellectual way. You know a bit about why you want to invest in stocks. I'm interested to know what some of the questions that you have at this point. You're thinking about taking the plunge. There's obviously a lot of uncertainty. So where's your head at this point? What are you thinking about actually making that first investment? Are you fearful? Are you excited? And what are some of the key questions that you still have at this point?
So first and foremost would be getting a sort of a nod in the right direction as to where to start, which I feel you're about to hopefully do. And the second thing is probably an understanding of how much to put in and how much to sort of consistently continue to put in going forward. We don't have to talk in actual figures, but even in terms of percentages, that would be a good point to clarify.
So let's start with where to start. When you say that, do you mean where to start finding information about what to invest in? Do you mean where to start in terms of literally how do I buy a stock? Do you mean a combination of the two?
Yeah. So I wouldn't call it barriers to entry per se, but bad analogy. If I wanted to gamble on sports or something.
Bryce can help you out with that.
I'm sure he can.
Not
He's
true.
a fan. He's got
Not
sports
true.
bet open right now.
Not true.
So if I wanted to do that, I would log on to one of the many gambling websites out there. It'd be a quick PayPal situation
Yeah.
to get your money in it and go from there. I know what the user interface is like and, how it works basically. If I was to try to do that with stocks tomorrow, right now, it would be that few hours worth of internet research.
See, I find that interesting because it's actually easier in this day and age to sign up for a brokerage and make your first trade than it is to sign up for a betting platform, put money in, get verified and make a bet. But the perception is warped. The perception is that it's harder the other way.
Yeah. I think you've got to
I
be.
didn't know that. There you go.
You've got to sort of be in it to know what's available, and I guess where we've come from what brokers used to be like to the technology now. First question, who do you bank with?
Commonwealth.
Perfect. So they make it incredibly simple through their CommSec Pocket app.
Should have really said which bank.
Which bank? True. Ren and I also speak about this. Often the best place and the easiest way to start, and this is how both of us got started, was just through your bank. They usually have a broker attached to them. So Commonwealth Bank have CommSec, which is their brokerage account. And they've also just released CommSec Pocket, which allows you to invest in a whole bunch of different ETFs, which we can talk about later. And it feels like to me that's something that you could easily just sort of crack into. I mean, are you someone that would probably go onto, finder.com and try and compare brokers?
I probably would, if I was to do it on my own without you guys helping, which most people aren't lucky enough to have direct access to you guys.
Well, I mean, hopefully this episode serves as a proxy. People can put themselves in your shoes and they can think that we're, talking to them directly because it's all applicable. Nothing we're speaking to you here is unique to you. No offense.
So I think my first sort of suggestion, I guess, would be that before the next episode, have a think about, and maybe look into what CommSec offer in terms of brokerage fees. That's also very important, but also look in the CommSec Pocket because they have a slightly different offer. But Ren, do you have any sort of thoughts on if Roe's first question is like how to actually get in?
I think the best option that technology has enabled these days for people that want to start with a small amount is micro investing. So, You guys have mentioned CommSec Pocket is a good opportunity to put smaller amounts in and pay less for brokerage than you would in a traditional full service brokerage account. So I think that's a good place to start. The second thing you asked was around how much money to put in. And this is an unhelpful response, but it's a little bit like a how long's a piece of string question. There's some rule of thumb that I think we'll go through, but it really is up to your individual appetite for risk and how much money you are prepared to lose. So I think that's probably where you want to start, is whatever money you put in the stock market should not be money that you need to cover your day-to-day expenses.
Might have to sell my monitor.
I think if you are putting money in and then taking it out to cover rent or covering, an upgrade of your monitor or something like that, that's money you shouldn't be investing, because short term there's risk in the stock market that things will fall and you might be pulling out a lot less than you put in.
I mean, if you're comfortable enough to talk in dollar terms, that would be great. The usual parcel that you start with through traditional brokers is a minimum of 500. Generally, what we're sort of seeing through the community is people start with 1,000, 2,000. That's sort of their general sort of starting range.
Probably, or what I would be thinking, in the low thousands.
Yeah, nice. Is there any sort of particular sort of thinking behind that, or it's just what you're comfortable with right now?
Sort of touching on what Ren said about, not stinging me if I lose it. That's basically it. It's something, it's probably the figure at the moment, I'm going into it as a complete novice, that I would be happy experimenting with, I would say.
Nice start. Ren, do you have any sort of more principles that you want to cover off?
Yeah, I think if we're going to talk about starting small with a micro investing app, I think an important concept to get your head around is dollar cost averaging.
Yeah.
So I think when you're planning out how much money you want to put in to start with, it shouldn't be, well, it could just be you put it in once, you set it and forget it. But I think building the habit of saving and investing in is a really important habit. And so I think for people who are thinking about how much money they should put in, how much they can save and stuff like that, it should be about building a routine where every paycheck you take a bit and you put it in your micro investing app. So it's not about just that first hit. And I think it's a good number to start with, but then it's about building a plan, for 12 months, when you get paid, putting a little bit in every time and building your portfolio that way, rather than, and this is how I used to think about it and how a lot of people think about it, you need to save and you need to save and you need to save, and you get to a point and then you can put it all in. Yeah.
Okay, that probably is one of the other things that had crossed my mind when I had that internal conversation about investing, is how easy is it to put that money in? What are the minimums? What are the fees? Those are some of the things that had crossed my mind, which I'd like to understand a little bit more about.
So if we're talking about CommSec Pocket specifically, it's $2 each time you invest, and that's up to $1,000. If you put in over $1,000, it's 0.2% of the trade value. So for example, if you put in $1,100, 0.2% of that is $2.20. So that's cheaper than any traditional broker. But yeah, fees are critical because especially if you're investing small amounts, they can eat into your returns very quickly.
Sure. Well, thanks for the Rain Man breakdown.
Hey, that's what we're here for.
In terms of minimums, as I said, generally 500 is the minimum with these micro investing apps. Some of them go down as little as a few cents. The CommSec Pocket is a minimum of $50. So really it's up to you to determine what are you comfortable with every paycheck to just start pushing into CommSec Pocket.
Yeah, that's actually a lot less than I was expecting.
Yeah.
And in terms of your question about how easy it is, I did a experiment for a TikTok video that didn't really work, but I did the experiment anyway. I did how long does it take to buy Amazon stock and how long does it take to buy Amazon socks, like socks off Amazon? 29 seconds to buy socks off Amazon, 24 seconds to buy stock of Amazon. So in terms of how long it takes and how easy it is, it's pretty straightforward these days and pretty quick.
So the socks thing works pretty well for the alliteration side of things, but I think you're really in the market for some shoes there, bro. You desperately need some.
We'll take that offline.
So I guess the question is, Ro, have you thought about how you will manage your, I don't know if you paid monthly or fortnightly, whatever
Monthly,
it is.
yep.
Yeah, how you will manage what you're going to put in at all?
Well, based on the information you guys just gave me, probably I'd put in more than that 1,000 to start with. So I'd be copying that, what do you say, 0.2%?
0.2%.
Yeah.
But after that, probably on maybe a monthly basis, just to start, every time I get paid,
Yeah.
I'll be apportioning a percentage of my salary that would otherwise just go straight into the bank
Nice.
into the app.
Nice. So before we move into, I guess, investing goals and then closing out, are there any other major burning questions? And I know we've sort of just done this at a very high level and you've got some time to think about it until we catch up again. But are there any other sort of major burning questions around how to get started from a brokerage point of view or that sort of money management side of things?
I'm sure that they'll come when I download and start using this app. The questions I've had so far, is a pretty high level. As I start actually looking to do it, there'll be more things that pop into my mind, which I will make sure to take note of. I'll do my homework like a good boy.
Nice.
And come back prepared with a few questions for you guys.
Yeah, I'd certainly encourage you to look at other brokers as well and just do your comparison and understand fees and whatnot. But I think from our point of view, the easiest way to get in at that very first barrier is just going through what you've got. CommSec Pocket, I'd just go and check that out, to be honest.
Yeah. Now, this is sort of where we wanted you to get to in the first episode. We wanted to get you to the downloading and signing up, putting money in the app stage. In the next episode, we'll talk to you about how you've actually found it, and we'll answer any questions you have about using the app and actually what to invest in. Because in CommSec Pocket, there's 7 choices, which is nice in a way when you're getting started. You're not, paralyzed by the amount of choices of individual stocks and ETFs out there. So we'll leave some of those questions for the next episode. I want to wrap with one final question, which is, I think
What's your Tinder handle?
Yeah. What is your Instagram and can I slide into your DMs? No, I think an underappreciated part of investing, and especially when we're young and we're not really thinking about, what's going to happen in 20 years and, all of that, is having investing goals and having a reason why you invest. So I think that really builds consistency if you have, clear goals that you are aware of and that you're working towards. So I guess to wrap this first episode, do you have any goals? Is it something you've thought about?
I want to be the Rohan Buffett.
Well, he started earlier than you, so you're already on the back foot there.
I suppose I haven't thought too much about it. I've got a general idea. I would like to see, obviously, my money grow. I think that's a given for anyone. No one puts in wanting to lose it. But not in terms of specifics. That's another thing. I don't know what's a realistic expectation of
Good question.
What is a good rate of return and across what period of time. I know you guys always bang on about, especially Lesky, about leave it in there. So I get that general principle. As to what I can reasonably expect in a good scenario, I'm not sure what the benchmark is.
Well, let's put it this way. Currently, your benchmark is what it is getting in the bank, right? You're getting an interest rate of, I'm not sure what your interest rate in your savings account.
It probably starts with a 1 or a 2.
So assuming that your stocks do go up from a very, very basic level, not taking into account inflation and that sort of stuff, but if it's doing better than that, then you're better off at this stage, right?
I suppose so, yes. But I don't think that beating my paltry interest rate from the bank is really what I'm going for. I'd like to see it ideally more than that.
I'd be interested to know just from, and you can absolutely throw numbers out here because it's a great question. What would you hope for over a year, say?
Well, for argument's sake, I suppose not factoring in any, just off my initial deposit and not factoring any subsequent deposits from future paychecks, I don't know, I'd probably hope to see 10 to 12% in 12 months' time from my principal investment.
Yeah. The average return of the ASX is around that 8 to 10%. Obviously, we're in pretty unprecedented times at the moment, so...
Haven't heard that being said before.
Yeah, manage your expectations, but you're in the right ballpark, that's for sure. So I'm sure we can help you choose through particular ETFs that may give you some performance that might get there. But yeah, great question. What are your thoughts on that, Ren?
In terms of expected return?
It's a good question, I think, that a lot of beginners would have is, and almost happy that Rohan's thinking about that, not sort of just blindly putting money in, but how do you know if you're going well or should he be managing otherwise?
So I think there's probably 2 ways to think about this. One is absolute return, and that's like, what is the actual percentage at the end of the year? And over the long term, Bryce is right. The Australian market has averaged 8 to 10%. I think it's like 10% since 1900, 10% a year. So in the long view, long term, 8 to 10% should be sort of what you're expecting. I wouldn't expect that in the short term though. There's just like, is too much uncertainty. Like hopefully it happens, but you know, it's just as likely it's 5% as it is 20%.
Past performance is not.
Exactly. Yeah.
This guy knows.
No, he's read his PDS search during his time.
One way to think about it is over the long term, you can expect sort of 8 to 10%. But for me, the way that I think about it is relative return. And, you know, we've been talking about your shockingly low interest rate. But also,
Not with Commonwealth, I should say.
Yeah, good call out.
there's really no other asset class at the moment that offers, on a relative basis, the risk return profile of equities. So, like, if you had $50,000 parcels and you were thinking about investing in government bonds, you'd be getting 1%, maybe less, probably. Interest, like cash, not doing that well. You know, unless you wanted to go all in on Bitcoin and take a real punt, there's no asset class that is accessible to us. Property is one that maybe offers a similar return profile, but as you said, it's so inaccessible for people our age at our stage of life. So I just think about it on a relative return basis. I think about me being 27 with the money I have, what's the best return I can get for my money? And on that basis, there's nothing better than stocks. And that's just my personal feeling, but that's sort of what the literature and the research bears out as well.
I suppose another question I have as well is, again, coming at it from a novice, from an investing perspective, would you suggest I follow my gut and try pick my stocks based on sort of what I know?
This is a good question. I think this is an episode 2 question though.
That is a great question. We've spoken on the show many times that there are ways that you can get into the market that take away the concentrated risk of picking individual stocks. If you're going to go out there and choose 2 stocks, then you are essentially, you know, putting all your money in both of those. If you go out and choose an ETF that spreads across 100 stocks, then you're taking away that level of risk. It comes down to your risk profile, I guess. So if you're confident enough to start picking stocks, great. But my sort of general suggestion from the get-go is just to dip your toe in the water, perhaps through an ETF. And then once you're comfortable, just understanding how the process works, what it's like to see your money move up and down on a daily basis, because I'm sure you're going to be looking at that every day.
Oh, yeah.
Don't. That's
Yeah, but I mean, it's hard not to. But look, I'm not going to say no to that at all. Like, it's if that's what you want to do. But I think from my point of view, if it's a testing the waters situation, there are ways that you can alleviate that sort of stress because there's a lot of fluctuation going on at the moment.
Yeah, my line of thinking at the moment is probably my level of risk acceptance or risk tolerance is correlated with the amount that I have invested.
Yeah.
At the start, it's not going to be huge.
Yeah.
And just to sort of get my feelers out there
Yeah.
and get my tentacles spread across the market, I probably have a higher level of tolerance. And I wouldn't treat it as a game, but I'd like to get as much exposure as possible. So I'd like to try pick a few things myself while also balancing things like, I'm guessing you're probably thinking ETFs.
yeah.
As that figure goes up, and probably in the long term, as I get older, I imagine I'd be more risk averse.
Yeah.
Yeah, I mean, like, let's put a real practical example on it. One of the ETFs in the CommSec Pocket app is the NASDAQ 100 ETF. 100 of the biggest US tech stocks, but just by virtue of them being US tech stocks, 100 of the biggest technology companies in the world. You could say, I'm going to invest in that ETF and basically make a bet on the technology industry becoming more important, becoming more ingrained in every industry, growing the size of the pie, and whichever individual companies do well, technology is going to do well. Or you take the concentrated bet on picking an individual stock and you say, for example, Microsoft is going to keep doing well. There's just a whole bunch more risks that come in if you're going to invest in an individual stock. You've got like management risk, like is Microsoft itself going to keep outperforming? You've got valuation risk. Microsoft is quite expensive at the moment. And so there's just a whole bunch more work that you have to do. And so the great thing about ETFs is in some ways you just don't have to worry about a lot of those things, or at least you don't have to worry about them to the same extent. The great thing about ETFs is it allows you to take a more gradual approach into investing. You know, when Bryce started investing in bloody 1992, you didn't have that choice. You had to pick a stock and you had to live or die by how that stock went. But now you don't. So you can dip your toe in the water. You can use micro-investing apps to just get started with a small amount of money. You can buy an ETF to give you broad exposure, to get a taste of it. You don't have to take that plunge into an individual stock to begin with.
Yeah, I have a lot of questions about like what to invest in as well.
Let's use that as a cliffhanger. I think it's a great place to wrap there. We've covered off some of the major barriers you thought were there to get into the markets, and hopefully we've been able to alleviate some of them. It would be awesome if next episode, I think you maybe have a think about some of the major individual stocks you'd be thinking about investing in and maybe why. And then also from an ETF perspective, you know, there's a lot of thematic ETFs out there. Marijuana, Ren just mentioned one on the top 100 tech stocks in the US. You can go Asia, whatever it may be. Maybe have a think about, like, to your point, you know, you're well read and you get an idea of what's going on.
Thank you very much.
So it'll probably make a good assumption on what you think has good growth potential and that sort of stuff. And we can, next episode, really dig into what are your options to invest, and we can go from there.
Sounds good.
What do you reckon?
Yeah, no, that sounds good to me. So probably hold off from actually investing just yet, would you say?
I reckon if at the start of next episode you've signed up for CommSec Pocket and have got money in the account, that would be a good place
We could
to
do
be.
a live investment.
We could.
First ever Equity Mates live investment.
Very first podcasting live investment. Challenge me, guys. Who's done it before?
So here's another question. Can I put money in there without it being invested in any?
Yeah,
Great question, yes. So all brokerage accounts, you're either linked to a cash holding account or the broker themselves allow you to just hold your money in cash. Ren, every paycheck, will send a bunch of cash to his broker, a brokerage account, and it'll sit there in cash so that when he's ready to pull the trigger, he can do it.
Think of it like a sports bet account. Like, you used that analogy earlier. It's exactly the same.
Yeah.
Like, you put money in the account, it sits in cash until you actually use
want
it.
to do something with it. And if I want to say, I don't, but for the listeners out there, if they decide to change their minds and take it out.
Yeah, you can just withdraw.
Is there a fee?
Generally not, no.
Okay.
Yeah. Another good question. So there's no harm in just putting money away at a regular basis. You don't have to invest that money, but at least you know it's going to be there.
Flirt with the idea.
For when you want to pull the trigger. And if getting it out of your account and into the brokerage account is that step closer to investing, then so be it.
Yeah, like as Bryce was saying, I use it as my forced saving. I transfer it in there, so when I'm looking at 32-inch curved monitors, I can't pull the
This
trigger on
guy's
that.
cash flow is awful. You can't even beam it.
Can you transfer me for those 3 beers?
I can't even afford shoes at the moment.
No.
Whose shoes are you wearing right now?
This guy runs a finance podcast? Jeez.
Hey, I am all invested
hang on.
all the time.
Are you actually wearing Roe's shoes? He is, isn't he?
He is.
Unbelievable.
He is.
Unbelievable.
I had to look down on the walk up and I was like, are those my shoes?
Jeez.
Are we cutting this?
This guy. No, we are not cutting that. That has to stay in. But
Hey
nice,
guys,
Roe.
I love investing so much that's where my money goes. And Roe, you're going to catch the bug soon as well.
So, Roe, we've spoken about potentially starting with CommSec Pocket. It is easy to start small with CommSec Pocket. You can download it at the App Store or Play Store and get started today.
And not only can you, but you will download it.
I will.
Otherwise, this 3-part series is really going to fall over very quickly.
Best of luck over the next few weeks or however long it is until the next episode, thinking about what stocks you're going to invest in. We look forward to picking it up then.
Thank you very much.
Thanks for listening to Get Started Investing, a production of Equity Mates Media. Please remember that everything you hear in Get Started Investing is general advice only. The content has been prepared without knowing your personal objectives, specific financial circumstances, or goals. The hosts of Get Started Investing may maintain positions in the companies discussed. Before considering any investment, please read the product disclosure statement and consider speaking to a licensed financial professional.